This was a very important week in the stock market, and I personally saw about a $1,200 decline in my portfolio. We've started to see money rotate out of big tech stocks that have been driving the market up all year. We also saw some of the broader market indexes like the S&P 500 fall around 2.36% and the Nasdaq fell just over 4%. The VIX, which is an index that tracks the volatility of the market, went up almost 30% just this week. And to top it all off, there was some bad news in the tech world, and CrowdStrike caused, quote, the largest IT outage in history. In this video, I'm going to make sense of all this and talk about a big mistake that I see happening right now in the market and go over what I'm doing with my portfolio. If you're new to the channel, my name is Sheldon, and I've been actively investing and managing my own portfolio for a little over 4.5 years now, and I make YouTube videos talking about stocks. So if you're looking to grow your own portfolio and learn about the market, check out some of the other videos on my channel and subscribe, and let's grow our portfolios together. The first thing that I want to do is address the panic of the week. So let's take a step back and really put this week into perspective. So if we look at a chart of the S&P 500 over the last year, this little dip at the end is what everybody has been freaking out about. In total, on the year, the S&P 500 is still up 21%, which is a way above average return. Your historical yearly return of the S&P 500 is only between 8 and 10%. So overall, the market has had a fantastic year, and honestly, it's about time that there's a bit of a pullback, and I'm perfectly okay with it. I think there's a few key reasons why this is happening, and we'll talk about them. But first of all, everybody just needs to chill out. Even individual stocks, especially in the tech sector, have had an outstanding year. And year to date, Google's up 28%, Meta's up over 37%, and Nvidia is up 144% just since the beginning of the year. So basically, the point that I'm trying to make here is that the sell-off is perfectly normal, and it's actually really healthy for the stock market. I can understand that there's a lot of new people in the stock market right now because a lot of people get in while the stock market's doing well, and that's probably true for even a majority of the people watching this video. If you haven't experienced a crash yet with money in the market, trust me, this week isn't even the tip of the iceberg. It's not even close. Stocks went down pretty much all of 2022, and this was just 1 week. If we start to see 3 weeks maybe where stocks continue to drop really hard, then I would say maybe we're starting to approach crash territory. But it's really, really important to be able to take a step back, have a long-term mindset, and look at the full picture when it comes to the stock market. So now that we've all calmed down a little bit, let's look at the 4 key reasons that I see for the sell-off. The first one is that valuations have just got really high. If we look at the historical PE ratio of the S&P 500, you can see that we've really only been trading at these prices maybe 3 or 4 other times. So I for sure think there's an argument to be made about how valuations are pretty high right now, especially for the mega cap stocks. For example, Nvidia takes up over 6% of the S&P 500, and it's trading at a PE ratio of 69. So the reason that the PE ratio of the S&P 500 is getting so high is because of a few of these big tech stocks that have been leading the market this year, and their valuations have just climbed up so much. And when valuations get too high, and this is the second reason for the sell-off, but people take profits. A lot of people have seen 20, 30, 40, 100% returns on their investments in the last few months, and they're going ahead and looking at that and saying, you know what? I'm going to take some profit. And what they do with those profits is the third reason, and they start rotating that money into different areas of the stock market. The Russell 2000, which is an index that tracks smaller cap stocks in the US, was also up this week, and it was up over 1%. So when you had some of the other indexes like the S&P and the Nasdaq that had really bad weeks, but then you go and you look at the Russell and it's actually up on the week, you can kind of get a sense for that money is rotating out of some of those big tech stocks and into some of the smaller cap stocks in the market. The last reason that I see for this week's sell-off is on top of everything we've already talked about, there was also some bad news in the market. And if you watch the channel, you know that I don't really think news matters too much when it comes to the long-term investor, but in the short term, it can definitely have a negative effect on stock prices, and CrowdStrike causing one of the biggest global IT outages in history probably didn't really help this week. Now, I want to touch on a big mistake that I see investors making in the market market right now, and just trust me on this, do not panic sell. I've done it and I've regretted it. Just don't try and time the market. It's not worth it. On days or weeks that you know your portfolio's down, just don't even look at your account. Just completely forget about it that day and try to emotionally remove yourself from your portfolio, which I know is really hard, but you have to do that so you don't sit there all stressed out every day thinking about your accounts. And that's going to be what causes you to panic sell. It's one of the biggest mistakes that you can make in the market because, first of all, you realize losses. Second of all, you might actually get discouraged from investing if the market goes right back up again. And that's going to kill any long-term chance that you might have of making a lot of money in the stock market. So just do not panic sell when there is small sell-offs in the market. I know it can be hard because you're losing money, but just keep a long-term mindset. And I promise you, over time, in the long term, it'll be worth it. And for my own portfolio, I have been moving some positions around in preparation for a tech sell-off, but to be honest, nothing really changes all that much. I would still consider my portfolio to be relatively tech heavy, but in the last few weeks, I did make some moves. I sold PayPal, which was definitely a loss, and I will probably make a more in-depth video on why I sold PayPal. But I mean, the main reason is because I wanted to rotate some money into other industries, and I ended up buying Caterpillar at $335, and I only got 7 shares. And I was thinking about, trying to build out more of a defensive portfolio. And if I do any moves in the next few weeks, I'm not going to be selling any of my tech stocks, but I might be buying some more Nike, some more Caterpillar, some more JP Morgan, just to make sure that my portfolio survives if we do have a bigger crash. Of course, I don't know what's going to happen, and I could be completely wrong. Maybe I should just be buying the dip on Meta right now. Who knows? All we can do as investors is make educated decisions based off our previous experience and what we know. And guys, it's times like this when you actually get an opportunity to make money in the stock market. And I know it might seem a little counterintuitive, but when the market's going down, that's when you want to buy because that's when you make money, when you get into stocks at lower discounted prices. But let me know what you guys think about the current market conditions and what you're doing with your portfolio, or if you think there's any important news or market data that I missed. If you got any value out of the video, or if you think you learned something, check out my channel and consider subscribing for near weekly stock market content. Let me know if you have any suggestions or feedback on the video. I wish everybody the best of luck on their investment journey. Peace.